Buying a home is an absolutely massive decision. It's a huge financial decision and it bears an awful lot of weight about other decisions you're going to make in the future. It's a decision that you want to get right and you don't want to make any mistakes along the way. So, here are 5 things you need to know as a first time home buyer to avoid making any mistakes in 2023. Hi, my name is Andy and welcome to my channel. Here I talk about Sydney property, I give tours of homes that I inspect within the city, and I provide free education to those looking to buy a home in 2023. If any of that interests you, smash the subscribe button so you don't miss any golden nuggets along the way. So the time has come. You've decided you want to pull the pin and you want to get out of the rental situation and you want to buy your first home. So here are 5 of the most important things I think all first-time home buyers need to know when they get out to buy their home so they don't make any mistakes. Number 1, not using any state or federal grants. So a lot of people, it's crazy to think, but a lot of people think that they still need something like a 20% deposit, otherwise they can't buy a home. And while that is ideal, it's absolutely not necessary. Oftentimes, a lot of first-time home buyers look at the median house price, say in Sydney here, see it's $1 million, 20% of that, I need $200,000 as a deposit. I also need my stamp duty, my legal fees, all the other costs associated with buying a home. And quickly they're thinking, I need $300,000 before I can buy just an average home in Sydney. That is absolutely not the case. There's many state and federal grants out there that offer different ranges of deposits, some as low as 2%, and some grants that allow you to forego paying stamp duty altogether or pay a concessional amount, and even grants where you don't have to pay lender's mortgage insurance. Best thing about a lot of these grants is just because you use one doesn't mean you are eliminated from the rest. You can use as many grants that you qualify for in your home buying process. Oftentimes these grants reduce your upfront costs and make that barrier for entry a lot lower and making it a lot more accessible for first-time home buyers to get in. Number 2, talk to a mortgage broker. Not any mortgage broker, just like any occupation, just like anything, there are good ones, there are bad ones. Try and get a referral or a recommendation from a family member or a friend that used a mortgage broker that has good things to say about their service. Mortgage broker can outline a lot of these grants in a lot more detail and can explain to you if you're eligible to them and can even do your application for these grants. They can also look at your serviceability with the bank and they can give you a wide range of products that all banks across the country offer. They look at your situation and your unique brief and they will provide you with the best possible service or product that all the banks offer. Unlike going into a bank, say any of the big 4, any banks, they will obviously only offer you products that they offer. They're not going to offer you products from another bank. Whereas a mortgage broker can look at all products from all banks and offer you the best one. Number 3, and this one is often not talked about, is the resale value of the property that you're thinking about buying. So a lot of people buy the home and they're thinking about pretty much the now. Right now, I want this certain property, but they're not giving thought to, maybe 5 or 10 years down the line, potentially when they want to start a family, or potentially when they have a partner, or potentially when they no longer want to live in that area because job changes. And all of these decisions will impact your decision on whether you want to keep the home that you've bought or sell it on. The average length of home ownership in New South Wales is less than 10 years, which means the data suggests that in less than 10 years time, you will probably try and sell your property either because of family changes, personal changes, work changes, anything along those lines that causes you to change and want to sell the property. And as we covered previously, there's a lot of upfront costs associated with buying the property. There's also a lot of closing costs associated with buying a property. You need to sell the real estate agent if you plan on going through an agency, and they can demand quite a hefty commission in the tens of thousands of dollars. So you want to make sure that you're buying a property that is going to see good capital growth within the time that you own it to at least cover all the payments and costs that you incurred while owning that property. You add up all your ingoing costs like your stamp duty, your legals, and all your maintenance while owning the property, your council rates, your insurance, and then also your outgoing costs with your selling agent and their commission. There can be quite a substantial, it can easily tick into the 6-figure range. It would be nice if after a certain amount of time, property had grown to at least cover those expenses, so you don't look back and think, I would have been better off renting during that time because I've actually lost money by owning this property. So you want to be strategic and you want to buy a property that has good growth indicators and that is going to see some resale value when you go to sell it on. Number 4, credit cards and personal loans. So when you go to get a mortgage, the bank will obviously assess all your expenses, and they will look at credit card limits, and they will look at current loans, like car loans or personal loans. These type of things that you may consider not a big deal will absolutely cripple your serviceability with the banks and may be the reason why you don't get approved for a mortgage. When it comes to credit cards, the banks will assess the limit on the credit card, not how much you owe. So if the limit is $10,000, but you don't use anywhere near $10,000 in a month, they will still assess you as using $10,000 in credit, which can substantially reduce your serviceability by as much as $50,000 and $60,000. So when it comes time to applying for a mortgage, make sure to close down your credit cards, pay them off, and then once you've been approved for your mortgage, you can then open up your credit card again. Number 5, this is such a common one, is not understanding your brief. Oftentimes first home buyers, they get a pre-approval for a mortgage for, let's say, $800,000, and they think, okay, now what? Jump onto realestate.com, domain.com, just punch in 800k and see what comes up. Start inspecting properties, start attending auctions, but they don't really niche down on the area that they want, the land size, the bedrooms, the backyard, car park, none of these things to really shortlist what it is that they're looking to buy. They end up driving from one end of the city to the other end of the city every Saturday. You only get 2 inspections. It's not the most productive use of their time. End up getting burnt out, lose motivation, and ultimately not end up buying a home. If you don't know what your brief is, the easiest way to do this is to sit down with your partner or your spouse or anyone else that has a say in the home buying process and work out what way you like to live your lives. If you are someone that likes to be close to the hustle and bustle in the city, you like the fact that you're close to public transport, or that you can just walk into the city if you need to be, you like being close to work, and you just in general like the lifestyle that city living offers, then perhaps buying an apartment would be ideal for your current situation. And from there, you can create a brief based on an apartment. But if you are someone who likes quiet, you drive, or maybe you work from home, you don't need to commute into the city, you like having a nice big area, perhaps you like having a backyard, then perhaps one of the outer suburbs, a small, nice family house or a big townhouse might be more ideal for you. But really drilling down on where you want to live, what type of property it is that you want to buy, everything about the property from its bedrooms, bathrooms, land size, backyard, car park. Be as strict with your brief as possible. Put all of that into realestate.com and only inspect those properties. This is so you'll be most efficient with your time and you're not wasting your time feeling deflated, going to homes, going to auctions for houses that you don't really like, and suddenly starting thinking to yourself, this isn't for me, there's nothing out here that I like. So there's the 5 things first-time home buyers need to know if they want to buy a home in 2023. If you enjoyed that and you would like to see more videos just like that, smash that subscribe button. Thanks for supporting. My name's Andy. Thanks for watching.